with recession predictions. Where is economy heading? So we can see in Wall Street Journal here that it looks much better than it looked in April. Likelihood of a recession in next 12 months. So this shows each pair of dots is an economist's prediction in latest survey and in April. So we can see that in April, the predictions were much higher than they are. I guess this is July when the latest survey was done. Reuters, Goldman Sachs trims 12 months US recession probability to 30%. This is updated June the 12th. They went down from 35% to 30% for the next 12 months. They are talking about tariffs here. JP Morgan research has reduced the probability of the US and global recession occurring in 2025 from 60 to 40%. However, we could have a period of subpar growth ahead. And of course, they're mentioning tariff shock here. They're also talking about Fed raising rates, and they're not expected to start using until December. Okay, so let's say what ChatGPT says. Here's the so what is the probability of US entering a recession in 25? Forecasts from major sources. So it looked at similar sources as we did. Real-time nowcast. Are we already in one? So there is this classifier that's based on May 25, 2025 data, and it assigns a 71% chance that US is already in a recession. Okay. Perspective. Looking at different indicators, unemployment trends, the yield curve, business survey. Consensus is that it's around 30-40% right now. Okay, that actually sounds reasonable. And then we have a summary table here, around 30 to 40%. Yeah, again, 30 to 40%. Great. So let's see what my favorite tool says about this. Let's go to Cape Analyst. Let's go to macro. And we get, for entering rolling recession in 25, we get current probability at 44%. Entering hard landing, right now it is at 0%. Entering stagflation, yeah, 0%, yeah, because inflation is down from like 10% to like 2-3%, so it's going down drastically. And money printing has stopped. So we can see that this model looks at monetary slowdown, and monetary slowdown, yeah, we can look at it here. It's modeled based on Fed funds rate and beef between 10-year and 3-year treasuries. So right now we entered monetary slowdown in beginning of 22, and it's been ongoing. And this is because we have a relatively high Fed funds rate, and the yield curve was inverted. So that's why we have this monetary slowdown. And one can see that usually this monetary slowdown ends just before recession starts, and that's because Fed sees that economy has slowed down a lot, so they remove monetary slowdown. But one can see that 70s and 80s here were an exception because inflation was really large here, so they had monetary slowdown even during the recessions to slow down inflation. And they managed to do this first in 80s. Okay, let's go back. This was monetary slowdown. Then we have the economic slowdown. And this is based on Fed funds, 10-3 year treasury, and manufacturing production index. So how much stuff is produced in USA. So right now, of course, we are in an economic slowdown that started in 22 and it's still ongoing. And then we come to a recession. So how this goes is you get first monetary slowdown, then you get economic slowdown, and then maybe you get a rolling recession. Rolling recession means that unemployment slowly starts to go up and you get unemployment that's rising. And if it gets out of hand, if unemployment starts rising extremely fast, well, then you get hard landing. But right now, unemployment is not rising fast. It's rising slowly. So we may enter rolling recession here, but it's if it only is rolling recession, then it should be fine. So we can see that here in 2023, it went up to 80%. It never reached 100%. So we never got into a real rolling recession. And then it cooled down, and now it's on the rise again. And this model is quite good at predicting these rolling recessions. It predicted one in the 70, predicts correctly one in 74, the one in 80, the one in 81, 82, the one in 1990, the 2000, and 2008, though it went up to 100% too late here. First in July 2008, and actual recession started January 2008. But right now it is at around 50%. So yeah, it's not. I mean, it doesn't go up to 50. It's not usual for it to go up to 50%, and there not to be a recession. It did that in 2019. It went to 70, 80%. And just for a short period, it went to 2021. And it did it also in 67. But usually, if it goes to 100%, then yeah, then it is a recession. There are no false positives here. It never reached 100% and not be in recession. And it looks at Fed funds, 10-3 year treasury, manufacturing, and continuous claims. Of course, you cannot have a recession without this spiking extremely. So we'll see if it starts to spike, continues to go up. Yeah, then. But right now, I guess it started to go up here, and that's why this one is reacting. I guess one of the things is that. But it stopped here. Of course, it can continue to go up. So if we go back to macro, and then we have hard landing, and of course, we are not near any hard landing right now. We can see how it's predicting hard landing here. Usually, hard landings happen at the end of a recession when everything gets out of control. Yeah, we had one in 2020 here, but it was really short-lived. Let's go to CAPE S&P 500 to see how CAPE distribution looks. So we can see that there are a lot of companies here that have CAPE 30 and above. I mean, it's like half of them. And there are like 41 companies that have CAPE 100 or more than 100. So let's see. Palantir 3,900, yeah. Nvidia 319. Tesla 252. Netflix 150. Psh. Uber 119. Let's see how Uber looks here. So Uber started reporting earnings in 2019, or started having earnings. So it's not enough data here to, but still, I mean, CAPE is really high. CAPE book value around 100. Okay. P value is around 80, 90. No, P is 19. 19, so it's not that high. Ah, I see. This is because they didn't have any earnings here for many years, or they had negative earnings or something. So that's why Schiller CAPE is so high. They didn't have a lot of many years, and CAPE is taking that into account. Yeah, okay. If you go back to the distribution here, let's see, what else do we have here? A lot of technology. There is a real estate, 146. Oh, that's strange. Let's see. They started having earnings 2004. CAPE has always been higher, even during 2008. So it provides information analytics and online marketplace services to the commercial real estate, hospitality, residential, and related professionals industry in the United States, Canada, Europe, etc. Okay. Let me see P ratio. P is around, really high. I don't know anything about this company. Okay. So that was about predicting recessions. If we are heading towards one, it will take at least a couple of months before it becomes obvious. Most probably it will take much more, because these things, they move really, really slow. So next time we'll talk more about how fast it can actually happen. Bye.